Hi, and welcome to Retirement Planning for Business Owners. This is Succession Planning with Insurance, video number 10. Business owners often have a large portion of their wealth tied up in their company. Owners traditionally use this wealth via the sale of their business assets or their shares to fund all or some of their retirement. Owners are often faced with multiple layers of taxations that keep them from really maximizing the value of their corporate assets. However, with a little planning, owners can add thousands of dollars annually to help fund their retirement livelihood using corporate dollars. So let's take a look at some of these solutions and their limitations. Problems with funding retirement through the selling of your business to either family, friends, a third party, or even a competitor is you have to find the next buyer. And then not only do you have to find them, once you find them, they actually have to have the money to buy your business. So according to the latest stats from Stats Canada, there are over 1 million small-sized Canadian businesses operating all across all the provinces, with 3/4 of the business owners owned by people ages 40 to 64. I wonder how many companies will be up for sale in the next 5 years. Some say a large portion, up to 3/4 of the small Canadian businesses, will come up for sale in the next decade. Price Waterhouse expects a tsunami of businesses for sale coming due in 2018 to 2025. So with so many businesses coming up for sale in the near future, it will be difficult to get your asking price and the appropriate money needed to fund your retirement. Another concern is that not only will owners probably not receive the amount of money that they hope for, they still will probably have to pay taxes on the money they received. Planning is crucial to reduce or even eliminate these concerns. So, problems with relying on funding your retirement plan by depleting retained earnings or taking all the excess cash out of your corporation via dividends, bonuses, salaries, combined with income splitting, is really in how you pay yourself. And of course, less the taxes paid getting the money out as well as growing it. So because profits or surplus cash, again, retained earnings, of an operating company or a holding company generally attracts a high tax rate, owners are encouraged to remove all the excess cash. Now they do so by taking a combination of dividends and bonuses or salaries, and again, some cases, income splitting. However, the new government has indicated that they're going to remove the income splitting strategy, forcing owners to rely more on dividends than other planning techniques. So most often when owners are forced to take extra money out of their businesses, money is lost in taxes and is also spent on things that really hinder their retirement planning. So again, taxes are of course a major concern, especially with the corporate and personal tax rates changing over the next upcoming years. Now, I'm not a big fan of deferring taxes, and I don't think it's always the best strategy. Typically, when you end up giving away money when you can least afford it during retirement. Again, planning is important in reducing or eliminating some of these concerns, and solutions are available to all business owners regardless of how much they earn. Fortunately, however, there are other options and strategies. Let's look at a few. So what if a business cash surplus grew tax sheltered? What if a business cash surplus growth was guaranteed? What if corporate and personal taxes were reduced? And what if retirement funding was tax-free? The answer, a corporately held whole life insurance contract. This type of permanent insurance contract will, if properly set up and properly funded, provide a tax-sheltered growth for cash surplus or retained earnings, provide a guaranteed cash payout on top of a death benefit. It'll reduce the amount of personal and corporate taxes that have to be paid, and it'll provide a tax-free retirement. Let's look at this a little bit closer. There is no one-size-fits-all solution to funding a retirement plan using a whole life insurance contract. However, by using various aspects of the Income Tax Act, Business owners are able to partner with insurance brokers to tailor design a plan that will drastically affect their retirement planning. Now, whether the life is insured is the owner, the shareholder, or a key employee, protecting them against premature death using company money makes lots of sense. So, within a properly funded whole life insurance contract, there are two main parts: the death benefit and the cash value. Now, depending on how the insurance contract is structured in terms of the ownership, the beneficiary, the amount of coverage of life insurance, the death benefit potentially can be paid out tax-free to either the business, shareholder, or to the estate. Again, whoever receives the money and how much is received depends on how the contract is structured. So when it comes to the cash investment component on an exempt life insurance policy, it grows tax sheltered, and the funds can be used to pay for retirement or a whole host of other financial goals like funding a buy-sell agreement, keeping key employees around, i.e. kind of a golden handcuff, and funding new business ventures, providing vendor finance to help someone buy your business, paying the capital gains tax, and more. So not only is there flexibility in what the cash value can be used for, there's flexibility in the amount of insurance coverage, how it's paid, and who owns the plan, and who are the beneficiaries. So let's look at a few other advantages. What makes this so attractive to business owners besides the flexibility and the use of cash values and structures? Well, the retained earnings accumulate tax sheltered. That means potentially no tax. In fact, one of the insurance companies we use has paid at least a 5.9% dividend rate over the past 65 years, and even through 4 recessions and, of course, 9/11. In most cases, it makes sense to pay for life insurance with company dollars rather than personal dollars. If, for some unfortunate reason, the life insurance policy has to be paid out, more than likely it'll be done so through the capital dividend account. Now, businesses starting out may not have the consistent retained earnings to work with, so it might make more sense to buy a term policy and then convert part or all of the contract when retained earnings have leveled out and are more consistent. Now, the annual expense, which is the cost of insurance, generally costs less than the taxes paid on the money made on the non-active investments. So if corporate money, again, not personal money, which is probably 25% less than the corporate tax money, grew at a rate of 5.9% or better tax-free, then this is a great way to build wealth to fund your retirement. The next question to ask is, now that our retained earnings have been growing within a whole life insurance contract and it's now time to go fund one of our goals, how do we actually have access to it tax efficiently? Well, that'll be our next video. There are at least 2 ways that this can be done. Here are 2 of the many success stories we have for helping business owners achieve their goals. The first one is a small case we worked on where a 48-year-old medical professional wanted to better use her retained earnings within her professional corp to retire. She had originally purchased a term insurance contract that she paid for personally. We brought in additional help to restructure her corporation and to have her new holding company own the term policy. This saved her some cash, but when we converted her term policy into a whole life policy, where she now has saved over $300,000 to put towards her retirement, and to date has reduced her overall tax bill by $200,000. Now, the next case is from our files where we dealt with a large construction company. The owner was a male 42 who was able to use the cash value of the whole life insurance contract to help purchase some land and building. Now, by using his whole life contract, he was able to save $800,000 in borrowing cost. We are certain we can help you and your business, and we look forward to serving you. Of course, to do all the things that we do, it requires a tremendous support team. And Maureen and Fred and David, they are key people in our organizations that help us do all the things that we need to do. I'm sure there's lots that we can do to help your business grow, transition, and prosper. Certainly connect with us. We'd love to learn more about your business and find ways to overcome your challenges.